If you're watching this, you're already thinking like an investor. Wise investors understand the risks of putting all of their eggs in one basket. Instead, they become familiar with a few different forms of investments and use their experience of each to make money in different ways. Luckily, there are several baskets to choose from. However, you should be aware that, as an investor, before you invest your money and create an investment portfolio, it is important that you consider all of your options. As you know, any form of investment has advantages and disadvantages. The best types of investments to make for yourself are measured by a few factors. This includes your risk tolerance, knowledge of specific markets, timeline, and reason for investing. Let's explore them all so you can decide what to invest in. Cash and commodities. Cash and commodities are usually known as low investments, so if you are new to the area or are risk-averse, one of these options might be a pretty good place to start. Keep in mind that low-risk types of investments also tend to have low returns. Number 1. Gold. Yes, you can invest in gold as well as other commodities like silver and crude oil. In reality, the tradition of investing in gold goes back at least centuries, but this does not necessarily mean that it is a wise investment. Gold is a commodity, so its price is based on scarcity and fear, which can be impacted by political actions or environmental changes. If you invest in gold, keep in mind that your price security, or moat, is dependent on external factors, so the price will fluctuate a lot and quickly. When scarcity and uncertainty are high, the price tends to rise, and when gold is widely available and fear has died down, the price tends to fall. If you believe the world will become more fearful in the future, gold might be a good investment for you. Number 2. Cryptocurrency. Cryptocurrencies are the most recent form of investment. They are unregulated digital currencies that can be bought or sold on cryptocurrency websites. In recent years, cryptocurrencies like Bitcoin, Litecoin, or Ethereum have acquired considerable interest as a vehicle of investment. But due to several unknown reasons, they remain an extremely risky investment, and there are possibilities for regulating the government and for cryptocurrency never to consider generalized acceptance as a form of payment. If you want to know how to invest in cryptocurrencies such as Bitcoin, etc., let me explain you. Cryptocurrencies in the same way that you are able to exchange US dollars for any other currency, such as yens or euros, you can also exchange your United States dollars for cryptocurrencies. Although cryptocurrencies are not technically part of the forex market, the mechanics of investing in cryptocurrencies are very similar, and the hope of cryptocurrencies investors is that the value of those cryptocurrencies goes up against a dollar, and they are relatively simple to buy online. For your information, someone who bought Bitcoin in 2013 and sold it today would have made enormous profits. The issue is that it is impossible to time the cryptocurrency market. Bitcoin and other cryptocurrencies could continue to skyrocket in value, or they could crash to zero. Take my advice to avoid it. At this point, no one knows for certain what the future of cryptocurrencies holds, so investing in cryptocurrencies is merely speculative. We don't believe in things we don't understand. That is not investing. It is gambling. Number 3. Bonds and securities. Bonds and securities. Other types of low-risk assets are bonds and securities. The US government, state and local governments or private businesses are able to buy bonds. Mortgage-backed securities are usually a form of bond issued by a US government entity, but they may also be issued by private firms. Number 4. Property. There are several ways to invest in real estate: condos, flipping houses, and business. While the options are many, the price of entry is high, but there are a couple of ways to get around this. Property, such as commercial buildings and houses, is often a costly investment that easily crowds out investors with less money. Crowd-funded real estate investment opportunities, on the other hand, are starting to emerge, offering new forms of investments for those who want to invest in real estate but don't have the cash. You can make money by buying the property at a below-market rate and selling it at full price, as well as by renting or leasing the property to tenants. Number 5. Mutual funds. A mutual fund is a type of investment fund operated by a money manager who invests your money for you and attempts to get good returns. Mutual funds are normally made up of a combination of stocks and bonds. However, they hold less risk since the capital is spread over multiple stocks and bonds. You'll only profit from stock dividends and bond interest, or if you sell when the market value of the grade improves. The truth is, you shouldn't care whether you beat the market or not. Your financial skill is judged by whether you're living comfortably when you're 75. Experts says investors should assume a minimum annual compounded rate of return of 15% or higher. If we can get it, we don't care what the economy does because we'll retire rich anyway. Well, everyone's motivations for investing and risk tolerance vary. You must decide which investment styles are best for your lifestyle, schedule, priorities, and risk tolerance. Lastly, but certainly not the least of these, I'd invest in the stock market. This is the best place to invest with a small amount of money and get big returns. That's all guys, I will come up with new videos with new ideas coming soon. Thanks for watching. Please do subscribe and suggest in the comment. Business Snap. Your weekly financial and news updates.